Bladek. I'm here in Montreal today. It's really sunny, it's a beautiful day, and as you see, we have the beautiful skyline right behind us here today. And why am I here? Well, I'll tell you a little bit about why. Equifax, they have the office where we do a lot of the credit correction forms right here in Montreal. And what I do with clients is we do these credit correction forms for clients that have an error on their credit bureau. And that happens quite often. We recently had one of these within the last 6 months where a client actually had an issue on their credit. So let me tell you a little bit about that, as well as what's happening in the mortgage market today on episode 120. Really excited to be here. And don't forget, if you know anyone that can benefit from this mortgage advice, make sure you share this content and send it to them. I would love to be able to get this information out to anyone that needs it. So Equifax, their head office is just around here, and I wanted to show you that, but this is actually more interesting. As you see, you got the skyline, the bridge, everything you need to see, as well as the Olympic Stadium there. It's really busy here. It's a beautiful day. So credit correction forms, a little bit about those and how they work. Well, if you have an error on your credit bureau and the lender sees that when you're getting a mortgage, that can really slow things down. And the example I wanted to give is about 6 months ago, we had a client doing their mortgage on their home, and the lender had an issue with the credit file because there was a loan on there from about 4 or 5 years ago that still had a balance on it. Now, it wasn't active because the last active date on that loan was 4 or 5 years ago. And it showed a balance still, and the lender needed to know what happened with that loan. Was it not paid? Was it paid? And that slowed down the entire mortgage process. So what we do is we need to actually send in an error correction form. That goes to Equifax, which is located right here in Montreal. We send that form in and it takes some time, but as your mortgage broker, it's my job to follow up on that, make sure that form is done and the errors are corrected. And then once that's done, the mortgage can go through. So if you've ever had an error on your credit file, you know how long it can take. And as a mortgage broker, I like to follow up with my clients' file with Equifax. I mean, I do send them a lot of business every year by doing a lot of credit checks for my clients and making sure that their credit file is updated. So with Equifax being right here in Montreal, that mail can take a long time to get there from Ontario. So, you know, when we send these credit corrections in, what happens is Equifax takes a look at it and looks at, you know, the client and sees, you know what, there has been an update here. Maybe we missed it, or a lot of the times the client actually has to send in proof of that loan being paid off. So they have to contact the lender, get a letter from the lender or whatever, the credit card company or the furniture loan company, whatever the account is that shows that it hasn't been paid, and send it off with that error correction form to Equifax. So if you're looking for an error correction on your credit file, make sure you reach out to me. I can help you with that. I've done it for dozens of clients and made sure that their mortgages have gone through, because a lot of the times the mortgage won't go through until that error correction is made. So, and again, as a mortgage broker, I deal a lot with Equifax here in Montreal, where the head office is, where they do these credit corrections. So what's happening in the mortgage market today, other than me talking about credit corrections? Well, the bond yield actually had a surprisingly big dip on Friday, went longer on Monday, and now we have a big dip happening on the 5-year bond yield, where there was an article by the Globe and Mail that says that could be the right catalyst that we need to see for rates to drop coming in the next few months. It's great news for home buyers and those who need to refinance. So with the 5-year bond yield, why does that affect fixed mortgage rates? Well, the banks actually get their funds from bond yields for their fixed mortgage rates, and bond yields affects fixed rates, whereas the Bank of Canada updates affect variable rates. So with fixed rates, we could see a rate drop in the coming weeks, and stay tuned to my podcast to make sure that you can get the updated news and everything you need on the updated bond yield there. I'll make sure I'll be updating everyone on the Canadian bond yield for that. Right now, fixed rates are still pretty high, and because of that, it's making it really difficult for a lot of people to purchase or refinance their mortgage because rates are a little bit higher. However, with this bond yield going down, it's a good time to get pre-approved actually and get a new rate locked in. And doing all that right now with me, we can set it up so your pre-approval is locked in, and when we do your pre-approval, we can have it automatically lower down as the rates go lower. So, and as we just complete our quick episode today in Montreal, if you have any questions with regards to mortgages, send me a private message. My appointment link will be in the video description link below, and we'll love to talk with you about your mortgage and what you need done on your mortgage, whether you're refinancing or purchasing a property. I've been in business this is my 13th year, and I'm looking forward to doing your mortgage today. So again, this is Joe Bladek reporting from Montreal, Canada, the head office where Equifax does its error corrections for credit. And yeah, their office is just right here near the bridge. So really cool place to be. I just had smoked meat today. I'm all full and ready to take on the day with a good full tummy of smoked meat down at Schwartz's Deli. As you see, there's a baby crying in the background. So anyway, with that, what other things are happening? I know that the jobs report came out for February. There has been 22,000 extra jobs added for the month of February. And what does that mean for rates? Well, it is going to put upwards pressure on Bank of Canada raising rates for their April 12th meeting. We'll have to see what happens with the March jobs report. Perhaps that won't be out by the time April 12th comes around, but with the increase in jobs, it's really going to put an upwards pressure on the Bank of Canada doing their increase on April the 12th. However, here's hoping to a lower inflation rate. We're at 5.9% right now, but we should have an inflation update in the next few days here for you here. And I'm looking forward to seeing that, because if the inflation keeps going down, then the rate increase on April 12th could be touch and go. So still don't have an update on the average house price in Canada, but we'll hope to get you that for next week. But yes, error correction forms, they're really important. You need to be able to do them correctly. If you ever have an error on your credit bureau, just getting back to that, it can take a while for your mortgage to fund, and it does delay things. So we need to make sure that your errors are corrected, and with that, the error correction form gets sent to Montreal, where Equifax takes a look at it from their office here. So if you ever need any help with that, let me know. And my name is Joe Bladek. I'm a mortgage broker, been in the business for 13 years this year, and looking forward to doing your mortgage. So thanks for watching episode 120 for Canadian Mortgage Weekly, Canada's only video mortgage weekly news podcast. And we'll see you next week on a episode from our where we regularly film. Today was a special time because of the Equifax head office here, and we'll see you next